So we are actually 3 days off of a complete month for being off of this meeting. And in that time, some things have changed, but it goes to show that there isn't a ton of change over even a 30-day period. And one of the things as we go through these stats, there were some wild fluctuations. And I want to speak to just a couple things on them. Because of the holidays, the numbers haven't fully settled in for our rolling 30 days. Right. When we calculate these stats, we do it off the past 30 days. So you got to think about that as being from the 12th to the 9th, or actually the 7th.
Right.
So there wasn't a whole lot of sales activity. So don't take these numbers too seriously at the moment. Let's wait for probably the end of January to have things settle out.
Right.
A couple things that have happened though, even as early as today, as recent as today, obviously OPEC's decision to cut production, that happened previous to last meeting, but the U.S. has decided to raise interest rates, and the U.S. economy is rallying right now. Now that's going to put pressure on the Canadian dollar and make the Canadian dollar a little bit weaker because people get a better return by investing in the U.S. at the moment. So that's going to affect that. Now also, our oil prices have rallied quite a bit, but this morning they published rig counts. So even where our numbers are today, they have diminished a little bit because U.S. rig counts are up. Now a lot of the oil plays need to have $60 oil to be profitable, $55 oil to be profitable. So as we start to move closer to that $55, $65, or $60 mark, we're going to see a lot more people engage in production. Yeah. So again, watch these numbers. There isn't a lot of data. So let's take a look at the actual numbers. Starting with the price of oil, it is $53.67. Now this is it's up versus $51.46, which was a month ago. And the Canadian dollar has stayed relatively flat. Normally when oil goes up, it bolsters the Canadian dollar and the commodities, but in this case, it's held back a bit because of the U.S. raising their interest rates.
Number of listings we're looking at right now, definitely down versus last time we looked at this, but 3,953 versus 4,937. And then in Red Deer, 428 versus 490.
Sorry guys about some of the static issues that we're having right now. Let me just see if this stops it. Does that stop it? Yeah. So it's actually stopped now? Yeah. Okay. I'm going to try lowering this a little bit.
Why don't you put it on your collar?
And see what happens. Is it stopped or is it staticky again? Jeez.
More bounce sheets in your laundry. Start using bounce. This is a bounce commercial.
We're going to finish it like this. We're going to finish it like this.
Stick it here.
Well, we'll try that and see what happens.
How's that?
How's that? Yeah? Good? All right. All right. There we go.
See, there you go.
There we go. I want to make a quick comment on your listing slide. Realtors really like December 31st as an expiration date for listings. So is it normal to say that listings would drop by 800 listings in that period of time? And the answer is yes, because of December 31st, but we're going to see a lot of these listings come back on the market. So that's just accounts for the huge dive in the listing numbers.
Awesome. Lindsey, do you want to chat about some total months of inventory?
Sure. Now that my mic is working again.
Lovely.
As for Calgary overall, we are sitting in a buyer's market. Again, take this with a grain of salt. 4.76 months of inventory. Single-family homes in a balanced market at 3.46 months of inventory, and the condos heavily in a buyer's market right now. Hopefully, those things improve in this 2017 because I think consumer confidence is going to be way up, and they're sitting at 7.62 months of inventory.
Surrounding areas, month of inventory, again, grain of salt, different numbers. When you take some stuff off, it's going to affect some of these smaller areas. Okotoks, 12.5 versus 5.0. Airdrie, 6.79 versus 5.14. Cochrane, 8.38 versus 6.74. Strathmore, 10.78 versus 7. Sundre, 12.5 versus 10.8. And Red Deer, 9.73 versus 5.45. And our benchmark price is sitting at $435,400.
Great, and actually, considering the price of oil is rallying and everything else that's going on, I think we're looking for a very strong 2017.